Good afternoon. Welcome everyone to join our webinar on the implementation of E-Invoice. My name is Hani and I'm the Accounting Supervisor at Premia TNC Malaysia Sdn Bhd. It's my pleasure to be here with you today. In 2023, the Inland Revenue Board of Malaysia, commonly known as IRBM, announced a significant shift in how business will manage their invoicing. August 2024, E-Invoice will be implemented gradually across Malaysia. So, let's dive deeper to gain a better understanding of E-Invoicing and explore its impact on business operations. What is E-Invoice? E-Invoice serves as digital proof of transaction between supplier and buyer, effectively eliminating the need for paper-based invoice. It contains all the essential information found in traditional invoice, ensuring that daily business operation can continue seamlessly without any disruption. A digital invoice refers to traditional invoice that have been converted into electronic formats such as PDF, JPG, or email attachment. However, it's important to note that a PDF invoice, even if sent via email, does not qualify as an e-invoice. The key difference lies in the fact that while digital invoices are simply electronic representation of traditional invoice, e-invoices are designed to be read, understood, and processed by software system, enhancing efficiency and reducing the risk of error. Now, let's explore why businesses are required to implement e-invoice system. There are several key reasons behind this shift. First is widen the tax base. E-invoice help capture more within the formal economy, providing the government with a clearer picture of economic activities and expanding the tax base. Let's look at the type of e-invoice. First is invoice. Invoice is a commercial document that itemizes and records a transaction between a supplier and buyer, including issuance of bill, e-invoice to document an expense. Taxpayer can create individual invoice or consolidated e-invoice on My Invoice portal. What is self-bill and consolidated e-invoice? A self-bill e-invoice is a type of e-invoice where the buyer issues the invoice on behalf of the actual supplier. This process is required under specific circumstances outlined by e-invoicing guidelines. Consolidated e-invoice is a summary of all the normal invoices and receipts that the business has issued during the month. Next is credit note. A credit note is issued by suppliers to correct error, apply discount, or account for return in previously issued e-invoice. Third is debit note. A debit note is issued to indicate additional charges on previously issued e-invoice. And lastly, refund. A refund note e-invoice is document issued by a supplier to confirm the refund of the buyer's payment. This is the situation where there is a return of monies to the buyer. Out of e-invoice in Malaysia outline who is required to comply and who is exempted from this obligation. Who is required to comply with e-invoice? E-invoicing is mandatory for all individual and legal entities. This includes a wide range of organizations such as associations, bodies of persons, branches, business trusts, cooperative societies, corporations, limited liability partnerships, property trust funds, property trusts, real estate investment trusts, representative office and regional office, trust bodies, and unit trusts. Then, who is exempted from implementing e-invoice? Certain individuals and organizations are exempt from this requirement. This include, while the implementation of e-invoicing covers a broad range of transactions, there are certain expenses that are exempt from the requirement to issue e-invoice or self-bill invoice. The following expenses are not required to apply e-invoicing. Let's now take a look at the implementation timeline for e-invoicing in Malaysia. The rollout is phased, targeting different groups of taxpayers based on their annual turnover or revenue. The e-invoice workflow is a streamlined process that ensures accuracy, traceability, and compliance throughout the life cycle of an invoice. Let's work through each step of this workflow. Implementing API or accounting software for e-invoicing offers several key benefits that can significantly enhance business operation and compliance. Compliance with e-invoicing regulation is not just a best practice, it's a legal requirement. So, what happens if a business fails to issue an e-invoice as mandated? Failure to issue an e-invoice is considered an the offender may be subjected to a fine ranging from a minimum of Rm200 to a maximum of Rm20,000. Additionally, there is the possibility of imprisonment for up to 6 months, or both a fine and imprisonment. We are at the end of our webinar. We hope that you have benefited from this webinar. Feel free to contact us if you have any other question. Premia TNC headquarters is located in Hong Kong. Besides Malaysia, we also have office located in Singapore, Taiwan, Vietnam, China, South Korea, India, Indonesia, and Dubai. If you are interested in knowing more about this jurisdiction, please check out our future webinars. Thank you for your time. We hope to see you again at the next webinar. Goodbye.